Hello, everyone. Thank you so much for joining the conversation today. My name is Mark Pencil. I'm founder and president of Startup Genome, and I will be leading today's discussion on the state of the Southeast Michigan startup ecosystem. Today's webinar is the result of months of hard work of multiple organizations and people involved, people with a shared belief that high growth entrepreneurship can be a force for good for our economy and society. It's very important to us to share key findings from this project with the broader community and with you today. We believe that this project can only be a success if it helps drive a productive dialogue on how to move forward as a community. Before we get going, on behalf of the entire project team, I want to thank the William Davidson Foundation for their generous support of this project. And I also want to thank the three panelists that are joining this conversation today. We have Deanna Callaghan, Managing Director of Endeavor Great Lakes. We have Lisa Katz, Senior Program Officer of the William Davidson Foundation. And we have Justin Mast, Founder and Board Director of Bloomscape. Thank you not only for joining this conversation today, but also thank you to the three of you for your tireless support in managing this project and for bringing it to success with us.
Hi, everyone.
Just looking at the agenda for about 10 minutes, we want to cover a few key findings. We then want to hear from the panelists' direct reaction to some of these findings, but also have a broader conversation around the project. And then we want to open the floor to you and look at some of the questions that you have and how we as a project team could potentially tackle some of those. For those of you who haven't heard of Startup Genome, we're considered the world's leading innovation policy advisory and research firm. We've advised more than 100 governments and public-private entities in the last 3 years. Typically in projects like this, our role is to prioritize, shape, and drive action with communities. So, similar to the project here, we're bringing data-driven assessments. We bring best practices and policies and programs from our global membership. And then we try to bring it all together with the community, build consensus around priorities, and then define actions together. The beginning of the conversation of this project was really the publication from our team, the Global Startup Ecosystem Report in June last year, where Detroit came out 41. Which meant an increase of 12 spots from the 2021 ranking, which was surprising to many of you and celebrated as a success, but it also raised questions on where do we really stand as a Detroit ecosystem and what are perhaps some of the ways that we can further grow our community and the success of our community. So it really triggered conversations between the William Davidson Foundation, Endeavor, the team at Startup Genome, and we really wanted to look under the hood and prepare this in-depth assessment for all of us to leverage and to make use of. So what we've done during the last couple of months is we surveyed well over 50 startup executives. We looked at and used major databases like PitchBook, Crunchbase, and Deerroom to look at the startup ecosystem. We led several founder roundtables to qualify and quantify key issues. We spoke with many of you, 18 key stakeholders, angels, VCs, corporate executives, again, to better understand the nuances in the ecosystem. And we also looked at specific subsector strengths within the community, such as automotive mobility, but then also other areas within the ecosystem. As far as the geographic scope is concerned, we're considering the ecosystem a combination of Detroit City, Detroit proper, and Ann Arbor. So we applied a 60 square mile radius and referred to that as our ecosystem in the report. We'll only get to cover a few findings today, but I want to bring to your attention that the full report is available on startupgenome.com. Would love for you to take a look, would love for you to engage with the findings and connect with us if there are any specific questions, any specific comments that we won't get to cover today. Okay, with that said, let's jump into a few key findings. First of all, Startup Genome, we typically use a global startup ecosystem lifecycle model that we've developed. We're looking at grouping ecosystems into 4 distinct phases. At the very early stage, you'll have the activation phase ecosystem with less than 1,000 startups. Those that are more advanced then have more than 1,000 startups and are looking at higher scaling capabilities and experience. And then you're looking at ecosystems with more than 2,000 or 3,000 startups respectively that are really becoming international hubs for growth and innovation in tech. Here for Detroit, what we're seeing is around 1,500 startups across the ecosystem. We're looking at an early stage globalization ecosystem that is now not only looking at injecting more resources into the ecosystem and activating the ecosystem, but also having a more distinct perspective on how can we grow the quality and the scaling capabilities within the ecosystem so that we can continue to create economic impact and success as an ecosystem. For that matter, looking at the performance of the Detroit ecosystem, we decided to include benchmarks at the national level, like Boston, Miami, and in Canada, for example, the Toronto Waterloo ecosystem, just to make sure that we're as best as we can comparing apples to apples and make sure that we're looking at successful ecosystems as benchmarks. For today, we basically wanted to cover briefly three topics. The first one is around community and connectedness. We want to tackle a culture of growth and scaling, and we want to look at access to funding with a focus on early stage funding. And here for all of those, we're looking at a few statistics, mainly from the founder survey, but also a few other elements. First of all, we wanted to look at what we call local connectedness, which from the perspective of founders looks at the quantity and the quality of relationships, as in how connected are they to the ecosystem. We've seen this at a global level to be a driver of startup success and startup ecosystem success. And what we found when we looked at Detroit founders' local connectedness is that they tend to be connected to founders and experts in the ecosystem. So they have a high degree of connectivity in terms of relationships. But at the same time, what we found to be somewhat interesting is while the relationship index is very competitive, the sense of community, which is measured by informal help that founders and experts and investors give each other, is perhaps not as competitive in comparison. So when you look at those two charts here, you can see that the sense of community index is slightly higher in the ecosystems that we decided to look at as benchmarks, with the exception of Miami. When we break down the relationship index and look specifically into the differences between founders in the city of Detroit and founders in Ann Arbor, we're seeing that the Ann Arbor ecosystem is more connected. It's a tighter community, and to some extent more advanced. The founder relationships in Ann Arbor, the investor relationships, and the expert relationships in Ann Arbor are significantly higher than those for the founders in Detroit City. Giving special attention to the ability, or to some extent, the inability of the ecosystem to look at creating more scale-ups, more big success stories, we wanted to shine a light on our ambition factor. Here on the left-hand side, you can see a self-reporting of founders claiming to build globally leading products. And it was quite surprising for me to see that Detroit founders are way below the global average, and also below most of the peers we were looking at when asked, are you building a globally leading product with the company that you're building right now? And to some extent, also looking at, factors that are, for example, the total addressable market, etc. We found on the right-hand side that we wished for Detroit founders to be somewhat more ambitious in the products and the companies that they're building. And this is also what we wanted to discuss with the group today. How can we instill a more ambitious mindset, and how can we, in that sense, also build faster scaling companies in the ecosystem? What we did find as a promising and encouraging sign is that Detroit founders are very well connected to other founders to peers in the top hubs in the United States, so high connectivity to New York and Silicon Valley, which is oftentimes supporting the potential for scale-up growth. We're seeing that Detroit is definitely competitive here as far as the founder connectivity to top hubs is concerned. When we look at the number of exits, over $100 million that were generated over the course of the last 3.5 years, we found that Detroit is competitive in comparison to the other hubs that you're seeing here. And this is an important chart that we typically like to show because these exits larger than $100 million, as well as larger than $1 billion, are typically considered triggers or trigger events for an ecosystem. If you manage to have a high recurring set of such major exits, that typically drives ecosystem success, exits begetting exits, and really driving a culture of growth and scaling over time. When we look at access to funding, what we found, and this is a chart, maybe first of all, looking at the attrition funnel of the startup ecosystem. On the left-hand side, you see startup output, which is the total number of estimated startups in the ecosystem of Detroit. And then, moving over towards the right, looking at the percentage and the value in absolute numbers of those startups that actually managed to raise a seed round, over to those who managed to then raise a Series A round and Series B and Series C. So it's an important metric for us to look at the success of an ecosystem to produce startups that continue to manage to raise funding for their companies. And what we found to be quite interesting to look at is that there is a clear Series A gap, a Series A cliff for the Detroit ecosystem, where we're seeing the highest drop-off from seed to Series A, with only 2.7% of startups with the seed round being able to raise a Series A. When we look at the benchmarks for this project, for this assessment, the average value was 5%. So you can immediately see that this is definitely an insight that triggers warning signs, and something that we want to take a look at. How can we basically prepare local founders to be more able to raise Series A rounds so that more of the Series C companies can continue to build their business and build success? When we look at Series A median rounds, we're also seeing that the rounds that are raised in Detroit are lower than all of the different benchmarks that we've been looking at for this exercise that are in a similar ecosystem lifecycle phase. And this is definitely also important to highlight, because it basically gives insight into the ability of founders and companies to be well funded and to really focus on building big success stories with a decent Series A round on average. When we look at the percentage of Series A rounds that are larger than $10 million, you can see that over time, we're counting 5 in Detroit. And you can see for all of the other benchmarks that the performance is somewhat more significant and better. You can also see that the count of Series A rounds in total is lower for Detroit than for the benchmarks that we've been looking at. So again, this is just another data point to quantify that when we look at access to funding, one of the highlights of the report and the findings were that we should be looking at Series A readiness and Series A performance. So just to quickly summarize some of the very high-level findings that we can talk more about in this conversation and dive deeper into as far as the full report is concerned. We see that founders are well connected, especially in Ann Arbor, but would love to talk more about the sense of community that we're seeing in the ecosystem. Interestingly, in comparison to most other hubs, we haven't seen a very clear center of gravity that brings people together and that perhaps drives the sense of community. So would love to talk more about, do we need something like that, or do we not need it? Typically an interesting debate. We want to cover the culture of growth and scaling in a way that we found founder ambition levels on average could be a bit higher. ESO support We're seeing a limited focus on true growth and scaling. Would love to cover that. And despite this, when we look at exits larger than $100 million, important exit and trigger event for ecosystems, we're seeing that Detroit is on par or performing better than their peers. Early stage funding, just to summarize again, the problem is definitely not in seed. We're seeing that we could do a better job at activating high net worth individuals and building a more robust angel community. But one of the real challenges we're seeing is really around Series A, with a low success rate from seed to Series A, as well as a low median deal size and very few investors being able to lead sizable rounds, for example, larger than 10 million US dollars. Again, please check out the full report on startupgenome.com and let us know what you think. And then let's move on to the second part of the conversation and the webinar today. So I'll bring back Deanna, Lisa, and Justin for a conversation on these findings, but also an open conversation and whatever you feel are some of the most important learnings as far as this research project is concerned. And maybe Justin, I'll start with you. You know that Startup Genome, we're typically trying to apply a very founder-centric approach in our work. And I'd love to hear from you, as a founder who built a rapidly scaling company in Detroit, what have you learned in this research? What would you like to bring to the audience today?
Yeah, thanks, Mark. And hi, everyone. I'd say it's good to see you, but I can just see the list of the names. But it's a pleasure to be here. And I know the group are really excited to talk to you all. Yeah, I'd say as a founder, this was a bit of a crash course for me in understanding behind the scenes on how the support side of the ecosystem works. I think a hunch I had coming into this is that the group of entrepreneurs in the area feels sort of separated, or that there's this sort of gap from the support side. And that was very much confirmed in the data, in our conversations. I think even in trying to get the data for this project, we saw that founders weren't feeling super connected, and maybe we're a little bit tired of engaging with the support side of the ecosystem. So that was very much confirmed. I think what I'd say is it's helpful for me to learn some of the context behind how we, from a regional standpoint, how we've seen tech and high growth companies as part of an overall economic development strategy. I've been in Detroit for 10 years, Ann Arbor's for 3 years before that. So, we're sort of new, but sort of not new anymore. And I think, what I've learned is that during this time, overwhelmingly the focus was on urban development, big business development, small business development. And that feels very appropriate. But tech and growth sort of got moved, again, probably appropriately to the back of house, or as less of a focus. And so I think some of the dynamics we're dealing with are a bit of a result of that. But I will say I see a silver lining here. I mean, the entrepreneurial community is not part of an organization that reports up to Michigan Economic Development. I mean, we participate in a global market. We're competing for capital, for customers, for talent. And so I think as much as we're very much rooted in this community, I think, even if it wasn't a big economic development focus, it's really taken off here in Southeast Michigan. We've seen a lot of big wins. People are showing it can be done here at all scales. I mean, you have, Duo and StockX and a lot of the really big wins. And then you have a lot between there and early stage founders now. And so I'll just say, I really see this as a mostly exciting moment to build around. I think, Deanna will probably talk a lot more about this, but I think it's pretty widely accepted that when you have founders exiting or sort of moving through the stages of growth, that that's what really starts to create this flywheel effect that a region can build around. I don't think it's automatic. I think we could waste the moment if we don't get we don't build on this, but it feels like a really big opportunity right now.
Thanks, Justin. I would love to understand from you, Deanna, perhaps, what are some of the comments you have on the ESO landscape? Is there as much momentum and as much encouragement as Justin is seeing in the founder ecosystem? And, what are perhaps some of the learnings coming out of this research for the ESO landscape that you're seeing?
I think one beautiful thing that we've seen over the last couple of years are more of the ESOs communicating with one another. I know Michigan Tech Week and other initiatives, even Build Back Better, have been bringing more people to the table. Very early on in early conversations with Justin and Lisa, one of the things that we talked about is if we really tried to create an ecosystem that is founder first and founder focused, and we actually communicated better across ESOs to support our founders, that it would be even more impactful than where we are today. Like right where we are today is I think a lot of organizations work in silos. I think that's some of the conversations that we had with some of our founder friends too. And so I think if we actually worked better together and communicated more effectively, I feel like the impact could be astronomical. I think one piece with this research, and Justin and Lisa and Mark have heard me say this over and over again, but if I were to say one thing that rang pretty loudly for me, it was that we need more policy and advocacy to support this area. Justin hit it on the head where, our ecosystem, and rightfully so, has focused on big corporates and small businesses. But we know that high growth entrepreneurship changes our economy and creates massive economic development. We've been able to show research that it's actually a multiplier effect and a compounding effect, that if we invest in great up and coming startups and scale ups, it can transform our economy. But what we've been seeing is that the money going into early stage funders has been fairly stagnant, and that there's only very few people who are supporting high growth entrepreneurship from the philanthropic side. We've been very, very lucky to have support over the years from William Davidson Foundation, from NEI. We've had a longstanding relationship with Wilson, but there's not many people playing here. And I think one of the areas that resonates with me too is that when there's only few people supporting this space, whether it's on the funding side and the investment side, or whether it's the ESO side, there's a scarcity mindset. And that piece is an area that I would love to see change. I think we need to make risks. We need to invest in more early stage companies. We need to have bigger checks. I had a beautiful conversation with the IDV team yesterday about how we could truly transform our companies at the seed stage and prepare them better to reach the Series A stage if we could write some bigger checks and take more risks. So those are some of the areas, but I really feel like this is our opportunity, as Justin said. This is our time to really double down and support high growth entrepreneurship here in the Detroit area.
Thanks, Deanna. Yeah, you mentioned quite a few very important points: policy and advocacy, and the economic impact of startups. I know this is something that, Lisa, you feel very passionate about as well. Lisa, would you be able to share one or two or three findings and learnings from your perspective as far as this research is concerned? What would you like to share?
I think for me, and it is super exciting that we're in this global top emerging list. Nobody saw that coming, and when that happened, we all questioned whether it was true. That will stick with me, and it has stuck with me throughout this entire process. I underscore what Justin said. We've really talked a lot about business attraction in our state, and we have rightfully thought a lot about small business, trying to stabilize our neighborhoods, trying to stabilize our communities. But it's that space that's in the middle, where we're talking about our growth founders, where we're talking about our tech founders, where the real transformative opportunities occur. The ability to pivot, to not just say, okay, we're about mobility, but we're about all the components of mobility, like artificial intelligence, big data, cybersecurity. Those are all really important things in our economy. And I feel like we haven't really thought about how growth and tech can be part of an overall portfolio of work that is supporting jobs, that is supporting economic opportunity for different populations. Startups tend to have a much more friendly environment for diverse individuals than large corporations do. So all those things are reasons why things I've thought heavily about through this work. But for me, the takeaway is really we need to double down on this opportunity, like this unique moment in time. Like, who knew we would be as successful as we have been without really being deliberate about how we are supporting that early stage investment, about thinking through that, our founders are relying on each other for support. That's where they're getting the greatest amount of support. How are our support organizations organized now to support these growth founders? When we first started investing as a community in entrepreneurship, as kind of a broader framing, including those mom and pop companies and things like that, we structured all of our organizations to support those small businesses, the ideation phases. And I don't think that we've really stepped back and say, okay, wow, we're at a different phase in our development now. Like, we're not in that in your second chart, I think it was, Mark, where it's like, we're not in the very early stage. We're approaching globalization. We're in a different moment in time. So we need to think differently and invest differently in where we are so we can maximize those opportunities, get off the emerging list and get on the established list, and really make a difference here when it comes to jobs and creating opportunities for our residents.
Any thoughts, any direct reactions from the other panelists to what Lisa just mentioned? How can we do this? How can we achieve this?
Yeah, I'll build on something you said, Lisa. I mean, I think one of the things that surprised me on the project, I was expecting, there's a big portion of the project that was getting out and talking to leaders from other ecosystems about what's worked there. So we were interested in Miami, Chicago, Toronto, Waterloo. We talked to folks from Indianapolis, Amsterdam, a few others, people of various sizes, et cetera, et cetera. And I think what I found is that, sure, there's some obvious things you can do. Early stage funding is an important role for like the local ecosystem. That's like something, kind of a principle that carried through. But I was really surprised how much of the playbook that got them where they are 10 years ago feels obsolete right now. And we're in a new era. Maybe COVID has something to do with that. The fact that like people aren't flocking to big sort of like centralized co-working spaces the way they used to, or the fact that maybe they do, but there's just a lot more of them, and they're not necessarily like these big incubation centers, but places like Bamboo. Every city's working on this stuff. There are so many incubator programs and accelerator programs that are like flying around. And I think what my takeaway from this is, if we're gonna figure out what's really helpful for catalyzing entrepreneurship here, I think we need more of a culture of innovation within our ESOs and the places that funding comes from, rather than a culture of imitation. And there's a place for imitation. Deanna and I were talking about this earlier. If you can take best practices from others and apply them, like, great. But it feels like it's, whether it's things unique to Detroit or just the fact that it's 2023 and the venture markets are very different, everything's different now, that I think we need to figure out a way to allow ESOs to try different things, measure what's working, and build on that, so that we're figuring this out in real time and working together to do it, rather than like coming up and carving some big plan in stone and then following that for the next 5 or 10 years. And so, I think it was sort of a reassuring and also a challenging observation to feel like that's really where we're at.
Thanks, Justin. Maybe we can continue the conversation with you, Deanna, on this. I mean, what we're typically seeing work very well in many ecosystems around the world is a culture of incubation, a culture of acceleration. And I wonder here in this case, we continue to see from the founder perspective, from the ESO landscape, et cetera, that, when it's really about building high growth, high tech companies and supporting founders in that process properly, also the angels and the investors, that seems to be a bit of a challenge and a bit of, something to work on for the ecosystem if we want to create faster growth and better success stories. Is there anything that you would want to comment on as far as this gap in scaling capabilities is concerned?
Yeah, I think Justin had mentioned we went on a little bit of a learning tour across the US and also in Canada. And when we were in Miami, we had asked most cities, but we had asked Miami, what were some of the levers that were pulled that helped to transform Miami from kind of a slower moving ecosystem to a pretty high growth, national buzz spot for high growth entrepreneurship and startups. And one of the takeaways that stuck with me is what Justin was alluding to, which is around building a culture of innovation and having the resources to take risks and to try things and to get weird and to fail and to pivot and to take down the barriers to allow for us to do that. And that means more resources. That means ways to kind of knock down whatever type of bureaucracy it is, and ways for us internally as ecosystem support organizations to lift up others and help others along the road to try and to test and to innovate. We're not Miami, we're not Chicago, we're not Waterloo, we're Detroit, and we have our own special, fabulous flavor. But I do think that if we had a stronger focus and a stronger support for high growth entrepreneurship, more resources, and we had a culture of innovation and allowing ourselves to try new things and allowing ourselves to fail and to succeed, I feel like it would be pretty transformative for us.
I agree. Thank you so much. I want to make sure that we give a bit of time to some of the questions that are coming in from the audience. Are there any important last points that any of you would like to make before we jump into that?
Mark, I have been kind of monitoring the questions a little bit, and I know, Doug asked right at the beginning, like, who are the 100 million? And then somebody else asked, how can we support this global mindset? There are a lot of things to unpack with those questions, but to me, what this is really making me think about is the need for greater visibility of the successes that we have had around entrepreneurship, so that when we have a good story to tell, people believe it and people see it. We should all know, to Doug's point, we should all know who these 100 million exits are. They should be as known to us as our big three automotive companies are. We should be celebrating them to that extent. And we think about global mindset. Some of what's made those companies successful is their connection and work that they've been doing going globally. I mean, Endeavor works with companies that are, the whole goal is to get them to go global, right? This is a key point for success. But if you can't see it, how can you be it, right? If we can't create the sense that it is possible, that there are companies right in our own backyard that are doing this, we have challenges. And we could go into the minutia of say Amsterdam setting up offices in San Francisco so they can have a presence there, and in Waterloo, corporations create soft landing spots for startups in their overseas offices so that they can do business overseas more easily. There's all kinds of solutions like that can support that type of work. And to Gabe's question, what about Series A? Tax incentives that are happening all around the country to support these things. I don't know that any of that is possible unless we really come to value our growth in tech companies and celebrate them, raise them up, make them visible to investors, and help our legislators, policymakers, and others understand how important they are to the future of Michigan.
Thank you, Lisa. This is somewhat related to a question that I saw come in from Lexi Perschel. Thank you so much for your question, Lexi. I'll read it out to the group. What are some examples of gaps we can fill to get founders to have more ambitious ideas and global solutions? She's curious if this is directly related to the Series A gap versus the lack of interested parties. Is it a lack of ambitious companies? I'd love for one of you to comment on this. I see Justin, you raised your hand.
Yeah, I can kick it off. I mean, I think this was probably one of the biggest like nuanced observations we had, because I think we expected earlier stage seed rounds to be the problem and not Series A, and it was flipped. And it's interesting because I think seed feels more local, but Series A is sort of the handoff into like a more global venture market. Like you should be able to raise from anywhere. And so I think this is a chance for us to see how we stack up more on a national level. So in terms of, there is this sort of like Midwest humble cultural question. I think like if one of our characteristics as a region is that we tend to like understate and over deliver, I see that maybe as something that wasn't an asset in the last phase, but might, of more exuberant venture funding, but might actually play well in the coming years. That's a hope, I guess. But yeah, I mean, I think in terms of ambition for companies, one of the things we heard is that founders here have big ambitions, but a lot of times they get sort of like pushed down or sort of rerouted in a way that aims a little lower. And I wonder if that's just like some questions of our own self-image on what we think we can achieve here. And so I think, having, these $100 million plus exits might start to shift that a bit. The other thing I'll say is that, and this is more from my personal experience than the research, but I think there's a real art in building a company in Detroit, probably in any market, but certainly in Detroit, where you're grounded in the local ecosystem, but as quickly as possible getting perspective and ties to investors, advisors, and experts outside of the area too. And I think it would benefit our entrepreneurs to get those connections earlier on as a way to just start benchmarking and making sure that like the companies we're building, that we have a reference point to what's working and what's tracking outside of our market too. It's not to say that you just build something to go get a big next round, but obviously that's a big part of growing a venture-backed company. So I think the more we can give bridges out to early stage founders, like high quality bridges out, I think that could help with this.
Totally agree. Yeah, I mean, tech is definitely subject to global competition and global collaboration, and the stronger the connectivity is, typically the better the outcome for us as a local ecosystem. I want to make sure, having just a few minutes left, that we also look at the role of policy, also because there are one or two questions coming in along these lines. Perhaps, Lisa, this is something you can refer to. What is the role of policy at the state level, for example, in creating faster growing companies, but then also just in supporting the ecosystem in any kind of way? Is it just, leaving the entrepreneurs to themselves, or do you see that there is a role for policy beyond that?
So this is one of our great discussions and conversations that we have a group have loved to have. And I think we've kind of come from, staying out of the way versus really looking at how other governments have played supportive roles to foster, healthier growth in tech and innovation ecosystems. So I think part of where policy can play a role is certainly in creating, for example, minimizing risk, right? Like we keep talking about, yes, while we have, we've done okay in early stage investment, we could be doing more. Could we be incentivizing a lot of our high net worth individuals in this community to be angels and to take greater risk through angel investment, for example, in those early stages through tax incentives that we know a lot of tax credits that a lot of different states offer to encourage that type of activity, supporting funds and other investment vehicles that help to crowd in other types of investment. Those are roles to play. Certainly thinking through if, how could we use our business attraction dollars to think about attracting small businesses, thinking through how we can support immigrant founders to come here and stay here, helping our companies get H-1B visas so that international talent, many of whom are engineers and scientists, can stay here. And I call out international founders just because they tend to be disproportionately, international talent tends to be disproportionate founders. They tend to be disproportionately more successful. I mean, there's a whole laundry list of things that we could be doing differently or thinking more deliberately about in the state to support this, to support founders differently. We have a wonderful, we've done some really, really wonderful things, right? We set up smart zones all around the state to help foster new businesses and get small businesses off the ground. The question is, how can policy be used to help those organizations evolve as well? So that, yes, they're at the ideation phase when somebody's just getting started, or they're at that small business phase. But are we incentivizing those organizations to have the most recent practices? You're connecting to the coast, for example, where VCs are really, really strong and active, so that we know what they're looking for on a day-to-day basis. That stuff changes and evolves. We need to be on top of that. So there's so much that could be done. I think that ultimately the founders are the rock stars. They're the ones that do the heavy lifting. They're the ones that take the risks. They're the ones that have to figure this all out. But certainly policy can be used to make that easier. And so I think, to me, that's the mindset we should be having here in Michigan, that other states like Ohio, Pennsylvania, Minnesota, Wisconsin, all around us are really thinking about very deliberately. And I don't know that we've had the same conversations here.
And is it partly because you think, or maybe this is also a question to the other panelists, is it partly because there is a lack of connectivity between the policymakers and the entrepreneurs? Do we know what the other stakeholder group is thinking about what they need and vice versa? Or is that something that we should take a look at as far as next steps and action items are concerned?
I do think that, our founders, sorry, I'll let Justin jump in, but our founders are dispersed, right? They need to have a voice. We need to figure out how we help to elevate them and their voices in this conversation. I think that's going to be a really important component. And honestly, we're in Michigan. We have a lot of stuff to deal with. Our policymakers are busy, putting out fires all the time and dealing with, really hard to serve populations, basic infrastructure issues. But I think if we step back and we look at where the future is going, where other states are looking, we cannot ignore the need for greater innovation in our growth and tech community as part of that overall strategy.
Anything you want to add there, Justin?
Yeah, I'll just say I think that Lisa hit the nail on the head there. And to be fair, I want to throw this out there. I think it's hard to support founders. We're not an easy group. When we're in the thick of building a business, we're not that easy of a group to work with, because we're very pressed for time and money and everything else, right? So, this term founder-led is something I both very much believe in, and it's something that's been a central value of all of our work together. But it's also a weird term, because I don't think what we mean is that founders, while they're building their companies, are also doing all this work, actively involved in policy and all this other stuff. So I do think there's an art to, I think it takes extra work probably in this sector to figure out how to really support founders in a way that's meaningful for company building here. So I don't want to make light of the challenge of doing that. But I do think at the same time, it's very easy, if there is a disconnect, I think it's easy for policy or other parts of the support ecosystem to kind of get off focused on the wrong things, investing time in the wrong things, or doing things that might actually be getting in the way or aren't super helpful. So that's my extended version of yes.
Thank you, Justin. Okay, and there are a few remaining questions. I'll focus on the ones that are not methodological and are more difficult to respond to in a short text. So I'll pick the one from Jim Ross, who's asking, will the Coming Forward Innovation District begin to attract larger thinking, possibilities thinking? And I think this is perhaps not only relevant for Ford, but generally the corporate ecosystem. We heard repeatedly that there is perhaps a bit of a disconnect between the corporate ecosystem and the founder ecosystem, similarly to how there is a lack of connectivity between policy and the founders. And Detroit has such an amazing opportunity of leveraging bigger corporates in helping startups scale and understand problems worth solving. What to be said? What can we do to build better connectivity between corporates and startups in the ecosystem?
Tackle that. I'm really excited about Michigan Central and all the innovation district work and activity that's happening in the city of Detroit. So even just knowing what I know about Michigan Central, I mean, they're working with, a leading edge group, New Lab, that really understands the founder community. They have a studio model where they're going to be looking at matching the best ideas with the greatest founder opportunities, a global mindset. So they're not just saying, okay, yes, they are looking at how do we cultivate, startups here in Southeast Michigan and beyond, but attracting, the world's best into our ecosystem and making sure that they have, the wraparound support, the not just local, but national and global access to investors, et cetera. So I'm excited about how they might be able to kind of shake up the type of support and some of the, potentially density of that ecosystem. But, we can't obviously rest all of our laurels there. We need to have, a diversified approach in everything that we're doing. And but I do think I saw Tamika Ramsey's question too about the support for people of color and other underserved populations. I do know that team and many others are thinking more mindfully than ever about how to approach that. Trying to think through how their teams look differently, how they act differently, who they're trying to attract, creating those career pathways. I mean, that's the other thing. Michigan Central is having this wonderful career pathway approach where they're trying to encourage young people from all different walks of life to get into the fields that they're hoping they'll see start activity in, to get those individuals involved in those companies. I think those are all things that we need to be thinking about, but also for people of color, for women, are there different funding models that are necessary, because so few companies get VC, and of those, so few of them are women and people of color. We do really need to think about it differently.
Thanks, Lisa. I want to make sure we end on time, and therefore I suggest that each of the panelists perhaps share one last positive note from the research, or on their perspective on the Detroit ecosystem and its development in the next couple of years. And perhaps Justin, you want to start from the perspective of the founder again. Like, what would you like to wrap up with today?
Well, maybe to build on a question I see Lexi asking here. I mean, I think what I'll say is we had a small group working on the project, and with the four of us here, plus a handful of others we talked to, I mean, there was a lot of debate about the role of government and foundations in a startup ecosystem, what that's supposed to look like. Those conversations have been, I think there's things we some agree on but don't entirely agree on. I think that debate's actually really healthy for creating a culture of innovation as well. And I don't know, I'm thinking of ways to try to open up that conversation and make that more of a continual ongoing thing. I don't think we can we couldn't spend enough time with the entire group to come up with all the answers right now. I think things will evolve, we'll try things will work and not work, groups will share that. Maybe this is kind of a question back to the rest of the group and the other participants, but how do we keep this conversation going in a way where we can really push this forward in a way that's innovative?
Thanks, Justin. Deanna, any last thoughts from you?
I think I spoke at length about the policy and advocacy side, but one area that I keep thinking about is how do we create a system that helps develop or create or nurture early stage companies and startups? I think that's the piece. What we've seen over the years, and Justin and I had a conversation about this before the call, but we're not seeing a huge growth rate of companies that are receiving venture capital investment from 14, 15 through today. And I would love to see our ecosystem feel it out and figure out how we can create more great companies. I think there's the policy advocacy side of it, but there's also like we need to figure out what works at driving more companies and helping founders with great ideas build great companies. That one has been, I don't have that solution. I don't know what that looks like, but it's something that has been sticking with me since looking at a lot of the data that came out.
Yeah, and to Justin's point, I mean, much of this is an ongoing conversation where we need to continue to discuss, you know, what are we seeing, what are we missing, how can we improve, and this would definitely be part of the conversation. I agree. Lisa, any thoughts from you before we wrap?
I just think this whole process has been so exciting. I love it that we get to have this conversation, that we are at this point and our history as a community where we get to go back and say, okay, let's look at our roots again and what makes us special. It is that entrepreneurial background that we really get to think through, how do we rekindle. And the beautiful thing is, like, the data shows us that we've been successful without being deliberate. And maybe there's a lot of messages in that statement and in that thought. But we get to think differently about how we get to move the ball forward. Again, as a community, and we're all here having this conversation together. We all care about it, and we need to elevate it together too. So for me, I'm excited about the progress. Congratulations to all the founders who are and thank you, right, for who are taking those risks and who are being successful, for the supporters who are there to make them successful as much as they can. And let's just keep at it. I'm excited that we can have this and keep moving forward. So thank you also to the Startup Genome team for holding up the mirror and letting us see ourselves differently than we sometimes do. With maybe a little makeup this time, not just after we've gotten out of bed with messy hair.
On behalf of our entire team, I can really say that this was an exciting project, and we'd love to keep in touch with you, with the community, and really follow the excitement and the progress that you're making in Detroit. Definitely keen to follow up. And yeah, thank you to all panelists for your contributions today. Thanks for participating in the project. Thank you to all attendees for spending an hour with us to discuss the state of the Detroit ecosystem. And let's keep this conversation going. There is much to learn and much to iterate on. And yeah, thanks so much. Have a great day. Speak soon.